Bitcoin one day will be in the mix. Not yet, but it will be in the mix. Now, why is gold 70% up and you say that Bitcoin is flat? Well, it's all about relative performance to expectations, not necessarily to other assets, because Bitcoin is still destroying all of these other assets. Bitcoin was $70,000 in November of 2024. It's now $115,000. So it's appreciated quite a bit. Now, on top of that, Bitcoin was $40,000 in January of 2024.
For the first time in decades, gold has surpassed the euro as the number 2 reserve asset for foreign central banks. The US dollar remains number 1, but this shift is highly significant. It marks a turning point. Central banks, which traditionally favored fiat instruments like dollars and bonds, are turning back to hard assets. And here's why this matters. Central banks aren't day traders. They don't buy assets based on speculation. They allocate reserves with long-term stability in mind. If these institutions are doubling their appetite for gold, they're signaling a deep concern about the durability of fiat money itself.
Your central banks were 20% of global demand for gold. Historically, it's only been 10%. So it's 2 times more on a percentage basis. And what we have seen is that we have seen gold last year surpass the euro as a reserve asset for foreign central banks. So it's a big deal because historically what we have seen over the last 2 decades or so is that fiat currencies, those were the chosen method for storing value for these central banks. They're in the business of holding, issuing, playing with fiat currencies. So naturally, that's what's in their reserves. Gold, they never left, but it was a smaller percentage. That has completely changed. And now what you get is you get the fake world, the fiat world. The fake world is being kind of replaced or is being eaten into by things that are real, things like gold, Bitcoin, etc. Now, with central banks in particular, as they have kept buying gold, that is a persistent demand for gold. So gold is up from the start of 2024 till today about 70%. For an asset that is usually pretty stable, and that's one of the attractive features of it, the fact that it's up 70% in a little over 18 months, it's pretty incredible. This is like a historic run for gold. Now, why is it that gold is going up? Well, it's because you have governments that are printing a lot of money. You have interest rates that are colluding with the printing of money. Around the world, you get a lot of interest rate cuts right now, even though the U.S. is fighting it, right? Globally, there's a lot. You get the issue that occurred in 2022 when the United States of America decided that we were going to go and we were going to unilaterally seize the reserves of Russia. Now, whether you agree with that decision, not agree, whatever, but the implications of that meant that no longer was the US dollar and treasuries going to be a neutral asset. Jeff Park, CIO at ProCap BTC, he's got a fantastic piece out talking about this specific thing on there. I highly recommend people read it. Now, when you think about all of these different components that are feeding into central bank demand for gold, what people are really saying at these central banks is we need to have more allocation to a sound money principled store of value. Now, that doesn't mean the dollar is going away, right? The dollar is still the number 1 reserve for these foreign central banks. Gold is just now number 2. It used to not be number 2. So gold's been moving up, but the dollar is still king when it comes to foreign central bank reserves. Bitcoin one day will be in the mix. Not yet, but it will be in the mix. Now, why is gold 70% up and you say that Bitcoin is flat? Well, it's all about relative performance to expectations, not necessarily to other assets, because Bitcoin is still destroying all of these other assets. Bitcoin was $70,000 in November of 2024. It's now $115,000. So it's appreciated quite a bit. Now, on top of that, Bitcoin was $40,000 in January of 2024. So Bitcoin is up almost 300% in the same period that gold is up 70%. So yes, gold is up a lot compared to its historical kind of volatility. Bitcoin is up a lot compared to gold, but people expect Bitcoin to go up hundreds of percent every single year. And so when it doesn't do that, then people start to think, oh, why is Bitcoin not up more? Oh, I thought that Bitcoin should be up more. Gold's up 70. Why isn't Bitcoin up 1,000? Right? That's kind of what we're starting to see. So it's always very important to separate yourself from the feelings over the facts. And the facts are that Bitcoin's up a lot in the same period that gold's up a lot. Why? Because not only central banks, but companies, investment firms, individuals, organizations, nonprofits, everyone who can allocate capital is realizing that holding dollars and bonds is a losing trade, and therefore they want to hold sound money principles. And you're watching that play out with the adoption of gold and the adoption of Bitcoin. Both are going much higher, and I don't think it's going to stop anytime soon because we're about to get rate cuts, more money printing, and people are going to realize that the problem that they're running from is only about to get worse, and therefore they need to put bigger and bigger allocations into Bitcoin and gold. This was an idea that was popularized by Pierre Rochard back in 2014. He wrote about the idea that a government may go and print money in order to be able to go and buy Bitcoin. At some point, they would just say, screw it, print as much as we can and go buy as much Bitcoin as we can, sell the past, buy the future type situation. But the problem with doing that is the second you start to print money to buy Bitcoin or gold, you essentially are saying to the world, you're signaling to them, we as a government, as a central bank, have lost confidence in our fiat currency, in our national currency. You're telling everyone, go dump it. So then it becomes a race for the exits. You're going to have this massive currency collapse. Now, how quickly? Is that like a one-day thing? Is that a one-year thing? Whatever, all up for debate. But I think that's the big thing is classic innovator's dilemma, right? I don't want to disrupt myself because there's value to keeping the thing that I got.
There's an interesting theory floating around, originally proposed by Pierre Rochard in 2014. Governments could one day print money to buy Bitcoin en masse. In theory, they could sell the past, buy the future. But here's the problem. The second a government openly buys Bitcoin with newly printed money, they admit to the world that they've lost confidence in their own fiat currency. That creates a race for the exit, leading to potential currency collapse.
Like the government was just outsourcing the work to them. So the private sector was better able to deliver on some of these things than the public sector was, right? If you look at a company like Anduril, I would argue they're much better at building munitions and defense technology and equipment and stuff like that at this point, right? So the government really ends up being a purchaser, a organizer, like a logistics manager. But from a pure production standpoint, even the military, right, is the government really is using the private sector to do a lot of the work. And so that, again, doesn't mean that the government is bad or shouldn't have a participate in some way. But it does mean that the private sector, I think, is much better at allocating capital. And mainly it's because there are ramifications, both positive and negative, for the decisions they make. And that ends up being good for, I think the country is having put the money in the hands of the capital allocators, right? I always joke that, do you think that we could fix the DMV if we turned it over to the private sector?
I think pretty quickly.
It'd be like a no-brainer, right? People hate this example, but if we put Jeff Bezos in charge of the DMV for 12 months, do you think it'll get better?
You'll be getting your driver's license within 6 hours.
Well, I would argue this.
Shipped to your house.
I would argue this. If he is allowed to actually run it like a business, and he can actually fire underperformers, and he is given the same budget, the same resources, everything, not only will the experience be better, but I actually bet it will lead to more people being employed by the DMV. Because what will happen is you'll get higher throughput. And my guess is that they could do that and lower the cost. Right? So imagine how crazy that would be. Jeff Bezos, if he took over the DMV, probably could lower the cost for the customer, could increase the velocity and throughput, could improve the experience, could expand the product offering, and probably could drive top line revenue higher, which means that he could then go build more facilities, get closer to the customer, again, get wait times down, throughput higher. It just feeds on itself, right? It's efficiency. So if Jeff Bezos could increase the efficiency of the DMV and could lead to more government revenue, expanded services, and more job creation, wouldn't that be a good thing? Of course. But that's not how the government thinks, right? And so I just think that, that's a pretty good example of, it's not a public-private sector thing. It is who is empowered to do thing, right? Because if you gave Bezos the same exact capital as the government has now, well, he understands how to do this, whereas the people who run these things sometimes don't. And by the way, their hands are tied. I think that's one of the lessons from Doge is like these guys were like, yo, you can't fire anyone. It's crazy, right? What do you mean you can't fire someone who's doing a bad job? I mean, look at the Fed governor right now. Again, I'm not saying whether she should be fired, not fired, go to court, this, whatever. All I know is that you have a FHFA director, Bill Pulte, who says the Fed governor committed mortgage fraud. Pretty damning evidence in terms of what's been posted online. Now, is it real? I have no reason to believe it's not. So, okay. Then you have the president come out and say that she's fired. Still on the website, still going to meetings, still participating.
She said, you can't fire me.
I mean, that's kind of crazy, right? So, okay. Well, if that's happening at the Fed board governor level, we think it's happening at TSA, DMV, post office, right? All these like same shit's happening, right? And so again, like every single time that I have gone to one of those places, it's just like any organization. You've got superstars and you've got underperformers. And guess what? The superstars, they know who the underperformers are. They don't want to work with the underperformers, right? Because they got to pick up the slack. And so you don't think that the superstars wish that they could get rid of the underperformers and replace them with other superstars? Of course they do. And so it comes back to this idea of we're talking about organizational kind of management now. We're not talking about public or private sector. It's just that the government inserts itself with these rules that protects the free market or interferes in the free market in a way that now starts to screw up these organizations. So again, do you think that certain people who have great businesses couldn't be in charge of the TSA and get you through the airport faster? Right?
So, what's the big picture? We are living through a historic reallocation of global capital. Central banks are doubling down on gold, elevating it to the second most important reserve asset in the world. Bitcoin, while not yet widely held by central banks, is proving itself as the superior growth asset, outpacing nearly everything else. At the same time, inefficiencies in government-run systems highlight why decentralized, transparent, and efficient alternatives are gaining ground. Whether through gold, Bitcoin, or private sector innovation, the trend is clear. People want systems they can trust,